So what's up everybody? This is Almidris here again. Hope you guys are doing great. So let's get into it. Now I say I will show you how you could have entered this trade today. Now before I start, I want you guys to know that each time I ask you a question in the group, it's for your own benefits. Now, those who participate in the question and try to answer, when I'm trying to give my own view to that question I ask, it will help those people who have already participated or who have already engaged in the question to understand this concept very well. I am an engineering student. I believe in learning. I prefer when my tutor is engaging me in question while teaching me, because it forces me to engage my brain to that context, to that particular topic. Once I've engaged my brain in it, once I fail and I'm being corrected, that thing has stick with me and it will be very difficult for me to forget it. So that's why whenever I'm teaching, whenever I want to teach, I like asking questions first so that you guys will throw your own opinion. By the time I correct you, you will now see the difference. You will now see it how I also see it. So now let's get into it. The question I asked earlier today is, how many reactions do we have in a key level? So that's what I'm going to show you right now. The reactions we have in a key level. Where is that my... So we have three types of reaction in a key level. So the first reaction, let's assume this is a fair value gap. Now the first reaction we have in a level like this is this kind of reaction. When price gets into it faster, price will leave it. That's the first reaction. Then the other reaction we have in a price level like that is this kind of reaction. Price will get into it, move away from it, go back again and grab liquidity inside it and start moving away from it. So this is the second reaction we have in a key level. Then another reaction we have in a key level is the fail swing. A fail swing where price will come here and do something like this. This is the second type of reaction we have. This is the third type of reaction we have in a key level. We call this one failure swing. Then the second one that grab liquidity, this one, we call it what? Turtle soup or liquidity grab, whatever I want to call it. Then this one is just a kind of V or A pattern. So this one frequently occur, but my most preferable reaction in a key level is the second one, which is the liquidity grab pattern. That's the one I prefer to see around a key level. So there is also another type also, but this one is very rare, where price will come into it, grab liquidity, do this. And this one is very rare. It doesn't occur frequently. So that's why I say we have three types. We have this for sell, this for buy. The liquidity grab or turtle soup pattern for sell, and the liquidity grab or turtle soup pattern for buy. This is the first, this is the second type of reaction, and the third type of the reaction, we have the failure swing. Sorry, how do I erase this now? The third type is the failure swing. This for sell, and this for a buy. So these are the type of reaction we have around a key level. Now, the first one, which is that V shape, V or A shape or inverted V shape, this normally occur, it occurs frequently in intraday type of price action. Then while the turtle soup pattern is the most frequent of all of them, while the failure swing, which is this one, the failure swing, it occur but not frequently. So this is the type we had on GU today. Now, I was actually thinking that this thing may happen today. That was why I asked that question this morning. It's not because of I know it will happen. No, I don't say it will happen. The reason why I feel like it will happen is because Asian session has already grabbed liquidity. We have a liquidity grab in Asian session. Now, there's a lot of highs on H1 that made me think that, okay, if price was to come back and grab that liquidity, it will be very difficult for price to come back up and grab that liquidity. Though I marked out that price action because of anything is possible. Now, I'll explain to you with live chat. For now, just get this concept. We have three types of reaction in a price level, which is one, the V or inverted V shape. Then we have the turtle soup or liquidity grab, and we have the failure swing. Now, let's go to our charts. Now, whenever you are trying to pick a trade, you ensure that that trade is framed off of what? A higher time frame level. It should be framed on a higher time frame level. And you must also have a clear draw on liquidity. Now, I've taught you different type of point of interest, the fair value gap, the order block, the swing high and swing low. Now, there is another one we call the inverted fair value gap. I've not talked much about it, but I'm going to introduce it in the mentorship. Now, you must, for you to have a trade, before you enter any trade at all, you must have a draw on liquidity, a clear draw on liquidity. That's one. And the other thing again is you must be entering your market in a higher time frame level. Then thirdly, you must have a defined risk. What are you willing to risk? Is there a clear point where you can place your stop loss? That's what I mean by risk. So once you have these three things, then you can pick. That's when you say, okay, this is a high probability trade. Now, let's go into it. Now, the first thing I did was I marked this D1 order block. I sent it in the group. You can check it out. I sent this in the group. I marked this D1 order block. Then I went to the 4-hour. Now, this is what we call top-down analysis. Now, this is that D1 order block. And if you look at my order block video, the video I did in order block, I told you that the reaction points are the open and the mean threshold of that order block. These are the place that are more sensitive to me in terms of price action. In the full candle, the open and the mean threshold of that other block. So now the mean threshold of that other block should be somewhere around here. So I don't want to see price going above it. Once price has gone above that mean threshold, to me that other block has failed. When we have a kind of a healthy candle, not when we have a kind of engulfing candle or those this type. This type price may likely get to up to that wick, so I will not mind. But in this type of other block with a good candle like this, I prefer the mean threshold. I prefer price to respect that mean threshold of that other block. So now this is it, daily order block. Inside that daily order block, we have this 4-hour fair value gap. Can you see this? 4-hour fair value gap. This low and this high of this candle. So there's a fair value gap here. So if you still don't know what a fair value gap is, I advise you to go through the recordings in the group description. So this is the fair value gap, H4. Now we can frame our trade on the intraday. Now if you look at it, the Asian session has grabbed this liquidity, this high. Let me remove that H4 fair value gap. We all know that this is H4 fair value gap, right? So let me remove it. Now we all know that this has traded into that H4 fair value gap. I'm going to put it again, but I just want you to see this high here, this swing high here. So a liquidity has been grabbed inside that high time frame PDRA, right? Inside that high time frame PDRA, liquidity has been grabbed. Now we have this reaction. Now I told you there are two types of reaction. There are three types of reaction. We can get this inverted V. Market will just start moving, or we get a failure swing, or a turtle soup, or quote unquote liquidity grab. Is that clear? So now let me go back to H4 and put the fair value gap. I hope you guys are getting it. So please, if you are not getting it, you can ask me a question. Please, for those guys who are just joining us, who this concept is new to, you can ask me the questions you are having before the mentorship. I don't want you to be asking me what is a fair value gap or what is an order block while the mentorship is ongoing. So please note this. This is a fair value gap. If you have any question at all, you can come to my DM or you can ask the question in the group. I will always answer. Now this is it. So this is the first reaction. You can see the second reaction inside that H4 fair value gap. Now the reason why I told you guys that I will not pick this trade, I'm not going to pick this trade. Even if I'm going to pick this trade, I prefer this trade to move like this, take out this low, then come back and react inside this inverted fair value gap. Then I'll pick my entry. But unfortunately, price came back and retests that H4 fair value gap. So now I will tell you how I entered this trade or what made me pick that entry there. The first one was it could be a failure swing. It could be a failure swing. Now I'll tell you the second thing. I have three things that made me to pick this trade here. I will explain. But before that, I want you to know that when you are picking a trade, you must have a clear draw on liquidity. You must have a clear draw on liquidity. Now we have this low, previous day low, is a draw on liquidity. And this was the low I was expecting to target before the end of London session. But unfortunately, London session could not get to this point. So I exited the trade because I know news was closer and I won't be available that moment. I won't be with my phone. I won't be on screen. So that's why I exited the trade. So I'll tell you how I exited the trade and how I entered the trade. So this is my draw on liquidity, my first draw on liquidity. And my other draw on liquidity is this D1 inverted fair value gap. This inverted fair value gap here. This is my second draw on liquidity. My third draw on liquidity is this rejection block here. And my final draw on liquidity for this week, if this week is going to get here, will be this low here. So these are my draw on liquidity. Now, when I say draw on liquidity doesn't mean a place where you just want to start changing your bias. No, it's a place where you are looking to close some of your positions. Is that clear? So when they say what draw on liquidity, we don't mean draw on liquidity is a place where you start looking toward counter the trend. No, it's just a place where you are looking to offset or offload some of your targets. So now that's that. Now let's talk about how to enter this trade. Now the first reason why I picked this trade here was it could be a failure swing, which it actually was. Another reason is we have a short-term high here that was taken out. This is a swing high, and this swing high was taken out. So there is a liquidity grab here. Now listen to this. Whenever a liquidity is taken out, there are some traders who are trapped here, traders who are going high. They are trapped here. So it will be very difficult for them to come back and run that liquidity again. Though it may happen, a liquidity to be run like 2 or 3 times. But this is nice already. This is that H4 fair value gap. Liquidity has been run into that fair value gap. We have a high here, and they grab liquidity inside that H4 fair value gap and came back again this second time, grab liquidity here again, and inside that fair value gap again. So you see, this is the second reason. First reason is the failure swing. Second reason is we have another liquidity grab that went inside that fair value gap. Then the third reason, we have this gap here. We have this gap here. This gap, this we can call it void or gap, new day opening gap. New day opening gap. So this is a gap. You can see there is a void here. It's just like a glitch in the matrix, a glitch by the algo. There is no body, candle body close here. So I'm sorry, I've been coughing since on Saturday due to that fever I had. So this is the void here. The algorithm will remember it. So you see now I have 3 confluence here, 3 things that is making me trust this sell here. So however, when I entered this trade, I actually used some sell stop around here, just in case price comes to this point and grab this liquidity, just in case. So I place some sell stops around here. You can see sell limit. I place some sell limit around there, so just in case price comes to that point, because today was a busy day for me and I couldn't stay in chart for a very long time. Now these were my entry points. These are the points where I entered the trade. Now for my exit, I don't like being held in consolidation. That's one thing. Now London session was coming to a close. Let me go to the M15, 15 minutes time frame. Now my 1:3 would have been this low. My 1:3 would have been somewhere around this low. Let me show you. This was where I picked the trade. So my 1:3 will be somewhere around this low. here. So that was where I was looking to exit the trade, but already London session has closed. This was where London session closed. Let me show you where London session closed. So London session closed somewhere here. This was the close of London session. This candle here. So I just decided to take out my position here because London session has already closed, and we're getting ready for the New York session, which was this candle here. New York session started here, so I know that there's going to be a reversal in the New York session, and I won't be available there. So immediately price got to this point, I exited the trade. Then this is all about USDC, GU. If you have any question, you can ask. And as that of USDCHF, I'm already exhausted, so I think I'm going to make this one short. Now, those of you who have been following me, I did this analysis in the group. If you have been following clearly, this was the other block I was expecting price to react from, but unfortunately price came back and grabbed this liquidity. So there are days where price will do this and you can't do anything about it. You can't do anything about it because of news. Price will just violate your entry. Not like you are wrong, you are not wrong, but because of news, price will just do one other thing. You can see this week are doing the damage, but you can see how the body of the candle are respecting this other block. I did this analysis saying that this is where I want to see reaction from, but unfortunately that day I was also taken out from this trade because of news. It ran this low, and since then I've not even looked at this pair because this is not my favorite pair. Because of the consolidation on GU, I was forced to look at this pair today. So I saw that this market has been trending. Now, before you place a trade, what did I tell you? You must have a draw on liquidity. So when I look at this candle, this yesterday candle closed here, and this candle was printing somewhere around here this morning, somewhere around this green line here. It was printing somewhere around this green line here. I knew that, this is the draw on liquidity. So I quickly marked it out and I went to H1. I saw this other block here. So this was actually my first entry. This particular order block here was my first entry. I've sent you the chart in the group. So I saw it. Then I went to M15. I picked my trade on M15. So this way I picked my trade. When price get into this other block, I picked the trade and it started moving away from it. Now we had this let me show you H1 PDRA, which is the fair value gap here. Now I know what you'll be thinking. This is not a discount. This is not a discount. I'm sorry, my chart looks so messy, but when you're using this concept, this is how your chart would look most times. So you see, this is not, some of you will say, this fair value gap is not a discount. Now, why are we picking this fair value gap? I'm not picking this fair value gap on H1. We are inside a session and the session is expanding. So this is a higher time frame PDRA. We are not picking the trade on this higher time frame. This is just a high time frame PDRA. So I actually did this. Then I picked the trade on 5 minutes, on a 5-minute discount. Now you can see inside that PDRA we have this swing low and we have this swing high. Now inside that swing low you can see another swing low resting above it, above that fair value gap. So we have this swing low. So immediately this liquidity was grabbed, I picked it. So you can see from this low to this high, the market is inside a discount and it has grabbed liquidity. So that was why I trusted the buy and I bought. Can you see? So I bought it at discount below 50% and it has already grabbed liquidity. So this is what we call OTE. OTE, don't be confused by that word I use. OTE simply means premium and discount. When you are buying from a discount, you are buying at an OTE level. When you are selling at premium, you are selling at OTE level. So this is just it. So that was my entry. Now my target for this particular entry was this high here. Then my overall draw was this high here. This was where I closed all my entries. So unfortunately, I forgot to screenshot this particular entry here. But now for the final model, this is one thing I don't like talking about the more much, this breaker block, because a lot of people get confused what a breaker block is. So breaker block is simply an order block. Let me just say an inverse order block. Now, a bullish breaker block, a bullish breaker block is a bearish order block. Let me use that word. A bullish order block and breaker block is a bearish order block. Now, remember what I told you about order block? When we have three or more, when we have consecutive candles like this, all those candles, they are order block, right? So now we regard this, all this white candle as bearish order block, and you can see price came into it, trade into the mean threshold, that is 50% of this order block, and started selling again. Now this is a breaker block. Why is it a breaker block? We have a swing high here. This swing high took out this low, it broke this low, and from this low now we have another high that took out this low, this high that was responsible for breaking this low. So this is now a breaker block. I know it is confusing from the way I'm explaining it. That's why I don't like talking about breaker block. It's very confusing. So I think the best person that can explain breaker block for you is if you go and watch ICT video on breaker block. So this is what we call a breaker block. So when price came into it, I bought. Now, for those of you who don't know how to trade turtle soup or this breaker block, all you could have done was wait for a market structure shift inside this PD array, which is the H1 PD array. Remember time frame blending. You wait for all this thing to blend. Now we have a market structure shift, return to fair value gap, or this one, sorry, return to fair value gap, you buy it. We have another market structure shift, return to fair value gap, you buy it. So that's it until the draw on liquidity was met. I exited my trade. So that's all, guys. If you have any question, you can always come to my DM. So please, if you have gone through those recorded videos I sent in the group and you still don't understand anything, feel free to come to my DM and I'm going to answer all your questions. So until next class, have a nice week or a nice trading day. Bye.